Hey everyone, it's Patrick Langhans here, Cross Country Mortgage. It's your weekly lending update. I want to cover interest rates. Yes, they went up. And I also want to talk about homeowners insurance, specifically condos, and some things to look out for that could make your condo non-warrantable. And it all has to do with homeowners insurance. All right, interest rates. Yes, they went up. We had two inflation reports and a jobs report come out this week that all pointed towards higher inflation. Inflation is the arch enemy of interest rates. So if you hear anything about inflation going up, interest rates will probably follow. So we saw about a 0.375% increase in interest rates just this week. And most economists have changed their forecast on when these rates will actually start lowering from June to September. So unfortunately, we're kind of stuck in this higher interest rate environment for a little bit longer than we had hoped. Will they go down? Yes, they will go down. When will they go down? We don't know. But the benefit of the higher rates is less competition for your buyers when they're out looking to buy a home, which means more negotiation power. You've heard me say that a million times, so I won't go into that too much. But if you have questions about rates, inflation, or what's happening in the market, give me a ring. All right, let's talk about homeowners insurance. Homeowners insurance is part of the reason that inflation is going up. Homeowners insurance costs have doubled. Property insurance has gone up. And these costs all go into inflation. But here's something very unique. Condos. Condos have to get homeowners insurance for the entire community. So the HOA has to cover the entire complex, all units, all buildings. So what they do is they get a master policy. Well, these master insurance policies have gone up significantly as well. And that cost is passed on to the unit owners, usually through a special assessment or increased HOA dues. So the problem is what HOAs have been doing to battle this or to combat it is paying a higher deductible. So when it comes time to get a new insurance policy, a lot of them are changing their deductibles from 5% to 10% deductible. The problem with that is Fannie Mae and Freddie Mac require that an HOA master policy does not have any deductibles over 5%. So although the HOA is trying to look out for the community and save everyone money, they're turning all of the units into non-warrantable condos. A non-warrantable condo means the client needs to put down 20% typically to buy the home, and they may see some higher interest rates. So if you're selling a condo and your condo's non-warrantable, you're eliminating a huge pool of buyers that could buy it because not everyone has 20% down or can qualify for those higher interest rates. So you're actually hurting your home's value if your condo is non-warrantable. So what's the fix? Well, really, if you're showing a buyer condos, if there's any way to get that master insurance policy from the seller before you make an offer, we can check that policy to see what the deductible is and see if you can still make a warrantable condo offer on the property. If you are selling a condo, it's very important to get that insurance policy from the master insurance policy from the seller. And I'd be happy to take a look at it to make sure it's warrantable, that they haven't increased the deductibles and made the condo non-warrantable. Super important. It's happening a ton right now. Tons and tons of condos are moving into that non-warrantable realm because of these increased insurance costs and increased deductibles. Complicated subject. Call me if you have questions. If you have a condo buyer or condo listing, call me. I can help you out and figure out how to navigate all this. Hope you have a great weekend. Call me if you need me, and we will talk soon.